In 1913, the death of a reclusive financier sent shockwaves through the marble corridors of Wall Street and the mahogany-paneled offices of Washington. The man's will, read in a hushed courtroom, revealed a hidden fortune, one that included railroads, gold, and a web of secret trusts stretching from New York to London. The estate's assets were so vast, so intricately woven into the fabric of American finance, that their redistribution would quietly reshape the rules of money for generations. The emotional impact was immediate. Bankers scrambled to trace the threads of ownership. Lawyers pored over ledgers and trust documents, searching for clues. The press speculated wildly who would inherit, what would happen to the stocks, the bonds, the gold. The emotional echo was awe and suspicion. The pride of a nation built on ambition, the pain of secrets kept too long, the shock of learning that a single fortune could outlast its owner and outlive an era. A single death revealed the secret wiring of American finance. How did one fortune outlast its owner and outlive an era? The answer is in the way money, power, and secrecy can shape the fate of nations, long after the original players are gone. But to see how this fortune was built, we need to go back to the Gilded Age's wildest years. In the 1870s, America's cities were a riot of steam, steel, and ambition. The Gilded Age had arrived. Railroads stitched the continent together. Oil derricks rose in Pennsylvania. The clang of hammers and the hiss of engines echoed from Pittsburgh to Chicago. The emotional energy was electric. The pride of a nation on the rise, the pain of inequality, the shock of fortunes made and lost overnight. At the heart of this new world were the robber barons, men like Andrew Carnegie, John D. Rockefeller, and J.P. Morgan. Carnegie built an empire of steel, using vertical integration to control every step from mine to mill to market. Rockefeller's Standard Oil became a trust, swallowing rivals and dictating prices. Morgan, the banker, orchestrated mergers and bailouts, quietly becoming the lender of last resort for the nation's railroads and industries. The emotional echo was awe and suspicion. The public marveled at the scale of their achievements, skyscrapers, bridges, and fortunes measured in millions. But beneath the surface, fear and resentment simmered. The trusts and holding companies that made these men rich also concentrated power in ways the country had never seen. The government tried to keep up. The Sherman Antitrust Act of 1890 was passed to break up monopolies, but the barons adapted. They created new structures, new loopholes, new ways to hide and protect their wealth. The emotional toll was mounting. The pride of progress, the pain of seeing democracy bent by money, the shock of realizing that the rules could be rewritten by those who owned the game. How did fortunes built on steel and oil become the backbone of modern banking? Why did the richest men in America fear their own creations? The answer is in the ways ambition, innovation, and secrecy can build empires that outlast their founders. The seeds of modern finance were sown in the shadows of monopoly and ambition. In 1893, the United States was gripped by fear. The stock market crashed. Railroads failed. Banks shuttered their doors as crowds of desperate depositors lined up in the rain, clutching passbooks and hope. The emotional impact was terror. The pride of a booming nation, the pain of sudden ruin, the shock of seeing trust and money vanish overnight. The bank run became a national nightmare. In city after city, rumors of insolvency spread like wildfire. Merchants hid cash under floorboards. Families bartered for food. The government, paralyzed by indecision, watched as the country's gold reserves melted away. The emotional echo was humiliation, the promise of American prosperity, the pain of seeing it slip through trembling hands. In the shadows, a handful of bankers moved to save the system. J.P. Morgan, the most powerful financier of his age, summoned the nation's top bankers to his library. He locked the doors. No one would leave until a rescue plan was forged. Through the night, fortunes were pledged, deals struck, and the market calmed, at least for a while. The emotional toll was relief and resentment, the pride of a system saved, the pain of knowing it depended on a single man. But the pattern repeated. The panic of 1907 was even worse. The Knickerbocker Trust failed. The New York Stock Exchange teetered on the edge. Once again, Morgan orchestrated a secret bailout, injecting millions into the system and demanding that rivals do the same. The emotional echo was exhaustion, the pride of survival, the pain of knowing the system was built on sand. The term lender of last resort became a household phrase. The nation realized it could not rely on private fortunes to save public trust. In 1913, Congress created the Federal Reserve, America's first true central bank. 12 regional banks, one central board, and a new power to print money and set interest rates. But the real power of the forgotten fortune was in the way it shaped the new rules. The trusts and empires of the Gilded Age were broken up, but their wealth was not destroyed. It was hidden, protected, and quietly redirected into new forms. How did a handful of bankers become the world's unofficial central bank? What happens when trust in money vanishes overnight? The answer is in the way crisis, secrecy, and the hunger for stability can reshape the rules of finance. But the real power of the forgotten fortune was in the way it shaped the new rules. In the 1910s and 1920s, as the dust settled from the panics and the Federal Reserve took its first steps, America's great fortunes began to vanish from public view, not lost, but hidden. The titans of the Gilded Age, wary of taxes, regulation, and the rising anger of the public, turned to a new tool, the trust. The emotional impact was secrecy and strategy. Lawyers in New York and Chicago drafted documents that would shield wealth for generations. The foundation was born, not just as a charity, but as a fortress. The Rockefeller Foundation, the Carnegie Endowment, and dozens of others became the new faces of old money. Their names adorned libraries, universities, and hospitals. The emotional echo was pride and suspicion, the pride of giving back, the pain of knowing that charity could also be a tool for power. The economic term tax shelter became a whispered promise. By placing assets in trusts and foundations, fortunes could avoid estate taxes, shield themselves from lawsuits, and quietly control companies from behind the scenes. The emotional toll was mounting, the pride of legacy, the pain of public scrutiny, the shock of seeing philanthropy become a lever for influence. But the power of these secret trusts went beyond charity. Foundations funded scientific breakthroughs, shaped public policy, and even orchestrated Wall Street takeovers. The term philanthrocapitalism entered the language, the fusion of philanthropy and capitalism, where giving was also investing, and every donation was a bet on the future. How did charity become a tool for power? Why did the world's biggest fortunes go underground? The answer is in the way secrecy, law, and ambition can turn a fortune into a force that shapes society from the shadows. But the fortune's influence didn't end with philanthropy. It rewrote the rules of global money. In the 1930s, as the Great Depression swept the world, America's hidden fortunes moved quietly across borders. Gold was shipped to London and Zurich. Dollars were stashed in offshore accounts. The emotional impact was fear and foresight. The pride of protecting wealth, the pain of watching banks fail, the shock of seeing governments seize assets overnight. The term capital flight became a reality. As Hitler rose in Germany and war loomed in Europe, fortunes were moved out of reach, sometimes in suitcases, sometimes in coded wire transfers. The world's money map was redrawn in secret. The emotional echo was anxiety, the pride of survival, the pain of exile, the shock of seeing old alliances crumble. World War II changed everything. The U.S. emerged as the world's banker. The dollar, backed by gold, became the world's reserve currency. At Bretton Woods in 1944, the rules of global money were rewritten. The estate's assets, once hidden in trusts and foundations, were now leveraged into new investments, war bonds, industrial shares, and the rebuilding of Europe and Japan. The emotional toll was transformation. The pride of old money, the pain of new risks, the shock of seeing fortunes grow in the chaos of war and peace. The economic term Bretton Woods became a symbol of a new order, fixed exchange rates, dollar dominance, and the quiet power of those who controlled the world's capital flows. As the Cold War began, the fortune adapted again. Gold was moved to Swiss vaults. Dollars were invested in multinational corporations, real estate, and sovereign debt. The emotional echo was vigilance, the pride of staying ahead, the pain of secrecy, the shock of seeing the world's wealth concentrated in ever fewer hands. How did a hidden fortune help build the dollar's empire? What happens when old money meets a new world? The answer is in the way capital, secrecy, and global ambition can shape the fate of nations. But the fortune's legacy would be tested by new crises and new forms of wealth. By the 1980s, the world's great fortunes were no longer locked in vaults or hidden in Swiss bank accounts. They were moving at the speed of light, routed through offshore havens and digital networks. The emotional impact was awe and suspicion, the pride of innovation, the pain of inequality, the shock of seeing money become invisible. The rise of the offshore trust changed everything. Lawyers in the Cayman Islands, Jersey, and Singapore built webs of shell companies and secret accounts. The world's wealthiest families, corporations, and even governments moved trillions out of reach of taxes, courts, and regulators. The emotional echo was secrecy, the pride of protecting assets, the pain of public scrutiny, the shock of learning that the world's richest could play by different rules. Shadow banking became the new frontier. Hedge funds, private equity, and money market funds operated outside the reach of traditional regulation. They lent, borrowed, and speculated on a scale that rivaled the world's biggest banks. The term financialization entered the language. Profits came less from making things and more from moving money. The digital revolution accelerated the trend. In the 2000s, fortunes flowed into tech stocks, then into cryptocurrencies and digital assets. Bitcoin, Ethereum, and 1,000 other coins became the new gold, borderless, untraceable, and beyond the reach of any single government. The emotional toll was mounting, the pride of early adopters, the pain of lost passwords, the shock of seeing fortunes made and lost in a single tweet. The new money elite were no longer just oil barons or steel kings. They were coders, traders, and global investors. Their fortunes were measured in algorithms, not acres. Their power was exercised through code, not contracts. The emotional echo was both hope and fear, the pride of a new era, the pain of knowing that the next crisis could be triggered by a bug, a hack, or a single line of code. How did yesterday's gold become today's code? Why do fortunes now hide in algorithms, not vaults? The answer is in the way technology, secrecy, and ambition have fused to create a new kind of wealth, one that is harder to see but just as powerful. The next fortune may be invisible, but its power is real. In the late 1800s, the world's wealth was measured in steel, oil, and railroads. Carnegie, Rockefeller, and Morgan built empires with bricks, rails, and iron. Their fortunes were visible: mansions on Fifth Avenue, libraries in every city, names carved in stone. The emotional impact was awe and resentment, the pride of progress, the pain of inequality, the shock of seeing a handful of men shape the fate of a nation. Today, the world's new fortunes are built on code, data, and digital platforms. Silicon Valley's billionaires, Musk, Bezos, Zuckerberg, wield power not through factories, but through network effects. A single app can reach billions overnight. The emotional echo is both wonder and unease, the pride of innovation, the pain of disruption, the shock of seeing fortunes made in years, not lifetimes. The economic term platform monopoly defines the new order. In the Gilded Age, Standard Oil controlled 90% of America's refineries. Today, a handful of tech giants control the world's search, shopping, and social networks. The old robber barons built railroads. The new ones build digital rails. But the pattern is familiar. Old money hid in trusts and foundations. New money hides in offshore accounts, shell companies, and encrypted wallets. The emotional toll is mounting. The pride of philanthropy, the pain of public backlash, the shock of seeing power concentrate in ever fewer hands. Wealth transfer is the new frontier. The fortunes of the Gilded Age were passed down through family dynasties. Today's tech wealth is transferred through stock options, venture capital, and global investment funds. The emotional echo is uncertainty. The pride of building something new, the pain of seeing old industries die, the shock of realizing that the next fortune may be invisible, but its power is real. Are today's tech titans just new robber barons? What did the old fortunes teach about the risks of concentrated power? The answer is in the way every era less wealth shapes the world and the way every new fortune quietly rewrites the rules. So what can you do as the next fortune quietly shapes your world? The story of America's forgotten fortune is not just a tale of gold bars, secret trusts, and Wall Street drama. It is a warning, etched in the ledgers of every failed bank, every lost empire, every family that watched its legacy vanish in a single generation. The emotional echo is timeless, the pride of a nation at its peak, the pain of decline, the shock of waking up to new rules. Every cycle repeats. Power concentrates. Wealth hides. A new product, a new market, a new promise, until the next shock exposes the cracks. The panic of 1929, the meltdown of 2008, the anxiety of 2026, each is a reminder that the system's greatest risk is the one you can TC. The lesson is clear. Secrecy is both shield and sword. When fortunes are built in the shadows, when the rules are written by those who own the game, the cost is paid by everyone else. The dominoes always fall faster than anyone expects. The rules always change when it's too late to prepare. Will you be ready when the next fortune moves in the shadows? Will you recognize the signals before the headlines hit? The answers are hidden in the past, if you know where to look. Don't assume the rules of money and power are set in stone. Watch for the signals: rising debt, sudden deals, the quiet buildup of hidden wealth. Pay attention to the canaries, offshore flows, new alliances, and the fine print in every contract. In every reset, someone is early, someone is late, and someone never even realizes a reset happened. Will you be ready when the next hidden fortune shapes your world? Will you recognize the signals before the headlines hit? Subscribe for more cinematic economic history and learn how to spot the next hidden fortune before it shapes your life.